If you've ever wondered what the stock market is all about and how to get started investing in stocks, then you're in the right place. In this video, we'll cover the basics of the stock market, including what a stock is, what an index is, and what fractional shares are. We'll also take a look at some of the major indices in the stock market and how they may be used to track the performance of various market sectors. So let's get into it. The stock market is a place where individuals and businesses can buy and sell ownership shares in publicly traded companies. A share refers to a unit of ownership. When you buy a share of a company's stock, you become a shareholder, which means you own a small piece of that company. The value of your shares is based on the value of the company, which is determined by a variety of factors such as the company's financial performance, industry conditions, and overall market conditions. You can buy shares of a company through a brokerage account, and you can sell your shares at any time by placing an order through your brokerage account, which we did talk a little bit about in the last video, how to open a brokerage account. We will dive deeper on buying and selling stocks in a future video, so make sure that you have your notifications on so that you won't miss any new content. Now, you may have heard of fractional shares. Fractional shares are simply smaller amounts of a stock rather than a full share. This means that you can invest in a company even if you don't have enough money to buy a full share. Fractional shares have been around for a long time, but they have become increasingly popular in recent years due to the growth of online brokerage platforms. Brokerage platforms such as Robinhood and even Cash App have made it easier for individuals to buy and sell stocks online and have popularized the concept of fractional shares. Buying fractional shares makes it easier for investors with smaller amounts of capital to diversify their portfolio and invest in a wider variety of companies. So don't be intimidated by a price of a share of a company. You can start with as little as $1 in some cases. Now let's talk about indices and how they are used. An index is a statistical measure that represents the value of a group of stocks. Indices are used to track the performance of a specific segment of the market and provide a benchmark for investors to compare their portfolio performance against. There are many different indices in the stock market, each tracking the performance of a specific segment of the market based on various criteria such as company size, sector, or geographic location. Some of the most well-known indices in the stock market include the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite Index. The S&P 500 is a broad market index. It's made up of 500 large cap stocks and is considered a benchmark for the overall performance of the U.S. stock market. This index is diversified across a wide range of industries, including technology, healthcare, financials, energy, and consumer goods. You will find companies like Johnson & Johnson, ExxonMobil, and Amazon here. The Dow Jones Industrial Average consists of 30 large publicly traded companies and is one of the most widely followed and oldest in the world. Companies like Nike, McDonald's, and Coca-Cola are within the Dow Jones. And finally, the NASDAQ is made up of over 3,000 stocks and is known for its high-tech and internet-based companies like Apple, Microsoft, and Tesla, just to name a few. It is important to note that companies can be in more than one index and may be added to or removed from the index based on various criteria such as market capitalization, financial performance, and other factors. There are other stock market indices that track different types of stocks, but these are the most popular for U.S. stocks. So to make it plain, indices are like scoreboards for different markets or groups of companies. For example, if you're interested in learning about the companies that make cars, you might look into an index that tracks the performance of car companies. This index would show you how well these companies are doing based on things like price and profit. This can be a beneficial tool for an investor and will help you make more informed investment decisions. So I hope you now have a better understanding of stocks, indices, and fractional shares, and are ready to start your own path of investing in the stock market. My goal, as always, is to help you along the way by providing a solid foundation of knowledge in hopes that you will increase your wealth. As always, I thank you for watching, and don't hesitate to leave a comment with any questions or future topics you'd like to see covered. Until then, happy investing.